let's get in Manish Jain from Centrum joining us to discuss market fundamentals and the top sectoral bets. Manish, good morning. Thank you so much for joining in. You know, so much is happening, be it on a macro level, be it on a global level. Is there any sector or any space that you think is safe at current levels and will be immune to the volatility that we are seeing globally?
So before I answer the question sectorally, let me just give you a little bit of a background in terms of how I'm reading the market from the next 5-6 months perspective. Obviously, there is a little bit of a disappointment in the markets, especially amongst the investors, largely because over a 1 year, 13-month period, the market has been largely flattish. We've seen continuous earnings cut as far as Nifty is concerned. Second quarter is again going to be inline quarter. I don't think people should expect anything great from second quarter results onwards, particularly anything. But I think the timing of the GST rate cut from a domestic consumption push perspective was a very pivotal moment, right? I mean, it was a very significant moment. And I think Q3 is going to be significantly better as compared to Q2. And this is primarily going to show up in discretionary consumption sectors. And that's where I think the focus should be from an investor's perspective, is the fact that, when you look at two of these sectors, which I think are going to do really well in the near term, in my sense, one is going to be consumption, especially more so on the discretionary consumption. Staples also, yes. But again, more so on the discretionary side. So sectors like, for example, autos or, for example, white good, brown good. And we've seen some bit of early commentary coming through on the festive season, and it has been very, very encouraging. And second is going to be banks, especially larger banks, which are all trading at multi-year low valuations amongst less than one standard deviation, negative or two standard deviation from a 10-year valuation perspective. Given that credit growth pickup should now start happening from 10% levels to 13-14% levels, I think these are the two sectors that I'm going to be squarely bullish on, irrespective of the global geopolitical hangover that continues to happen on the Indian markets.
Manish, good morning. Thank you for joining in. Be bullish on these sectors, but are there sectors where you are exercising caution, where you see some excesses? What's your view on that?
So there are certain sectors which I'm not very optimistic on at this moment. The first one amongst them that comes to my mind is primarily staples, FMCG, for example. Where from a long-term perspective, if you look at fundamentally, then it's very difficult to clock in 4-5% plus kind of a growth over there. And for sector that trades at more than 50 times P/E multiple, I just don't see, how a long-term investor will kind of create value over there. So that is one sector which I'm not really overtly very, very bullish on. Pharma is again another one where we are now starting to get a little bit cautious. While the sector did not get impacted any majorly as far as the tariff thing was concerned, the last announcement, but valuations given the way they are much rather start shifting weight from pharma into IT. That's where I think the things are starting to bottom out. So that's again another trade that I would kind of look to play out.
Okay, so that's on the pharma space, Manish, but banking has to be the big focus point, right? We are seeing so much happening there. Financials in general, actually, because even NBFCs have seen some big money coming in. How do you see this sector performing from here on?
So if you look at this current quarter's numbers and if you look at all the updates that have come through, I think the larger banks have started seeing a little bit of a pickup as far as credit growth is concerned. I've seen numbers like ranging 14, 15, 16% advanced growths that have come in through. So there is a certain bit of pickup that has started to happen. Of course, MFI and NBFC is a sector that still kind of remains a little bit of under pressure. So, but I think if as an investor you wait for things to kind of improve and play out from there, then it'll be too late. The sector would have already run up. So my sense is that financials has a big weight in the index, 35-37%. One of the biggest direct beneficiaries, from a cascading impact perspective of the consumption pickup is going to be financials. The credit growth is going to pick up, personal loans or, these white goods, brown goods, and all of those EMIs will kind of start picking up. And valuations are very, very comfortable. And large number of issues, whether, asset quality issues or whether it's LDR, all these have kind of played out. I think from a 12-month perspective, it's a great time to pick up these banks and NBFCs.
Manish, short conversation today, running out of time, but thank you so much for sparing time and joining us today. Looking forward to having you more often on the show. Take a short break, more on the markets on the other side. Stay tuned.